Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for February 7th, 2011. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange rate fund symbol SPY. Over the last 2 weeks, we've been looking for a market correction to potentially head down towards the 122 to 126 area on the downside. We had two significant reversal days over those last weeks, including last week's Friday sell-off that had that big strong red candle that actually opened the window for that follow-through selling. But really, when the bulls were able to reverse that market on the Tuesday and push it back out to new highs, we're now looking at a situation where it's clear that the bears had a chance to break this down and simply never had the follow through selling to do so. At this juncture, that gives the bulls an opportunity to still test a higher level on the upside. As much as this may seem like a victory to the bulls and it leaves a window open for even another 2, 3, 4 spider points on the upside, the reality is that farther that this market goes on the upside without a correction, the stronger and the further it can actually correct when eventually a profit-taking cycle does begin. Last time the market got overextended that way eventually led to a flash crash, and not that I'm suggesting that we're going to see that repeated, but the reality is that if this market keeps extending to higher and higher levels, when that period of profit taking finally does kick in, the depth and the magnitude of it could certainly be much larger than would be if it started already. Next chart, I want to take a look at the ISE US Regional Banks Index, which is the symbol JLO. We more or less had a sideways consolidation, and last week we had a nice breakout on the upside in those regional banks. They're right now testing the upper end of our support resistance line, but they've already broken to higher highs. Really at this stage, that opens up the window for a move up to about this 2650, 27 area on the upside. That certainly would be helped by the whole market continuing to rally on the upside. If regional banks end up being a place where a lot of new money flows in this last cycle of the push, then we could theoretically even see $28 on the upside. And this chart certainly has more room to go on the upside than a lot of the other ones. Next year, I want to take a look at the ISE Syndex, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. More or less, with Las Vegas Sands coming out with an earnings report that more or less disappointed, we saw some broader selling in this index. Overall, we've been looking for that market high to come in at that 136, 138, and so far it's been holding. While if the whole market rallies, we certainly cannot rule out the possibility that the Syndex will come up for a retest of the previous highs to make like a double top retest or something of that nature. But in the bigger picture, we feel that the Syndex has only marginal upside potential and is already fully priced. And so really, if anyone's trading it to the upside, it should really be more of a swing trade or a scalp on the upside and not a long-term investment. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF, and the home builders have continued to deteriorate or weaken in spite of the market stabilizing over the last few days. This $10 area, this 10-10-30 area, is going to play a key role. If the lows come in this point, this entire profit-taking cycle may very well only be a little sideways flagging formation that more or less can bullishly roll back up and even target $11, $11.50, $12 on the upside. In the same regards, if we start seeing this index testing down into 1070, 1050 on the downside while the whole market is rallying, that relative weakness will certainly cause further sector rotation out of home builders and into other sectors. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and we had a bullish breakout last week as well, and is now sort of moved up to the top end of our measured move on the upside. This 1220 this 124 to 130 area was an area where we anticipated the measured moves to all take this, and we now more or less have completed all those measured moves. While that we certainly cannot say that this can't break higher, but if it does, it's what we call an extended move. Essentially, it would be the tail end of a rally. At this stage, we do believe that this natural gas index at some juncture will profit take, but and the risk reward of remaining long this natural gas index is marginal, but there's no indication of a reversal yet, simply that the price targets have been hit. Finally, I want to take a look at the ISE Mini FTSE 100 index, which is the symbol UKX. We more or less had this little sideways consolidation, have all the selling contained in the 580, 590 area, with the FTSE now working its way back to its previous highs. Any bullish follow through here would finally open the window for a move all the way up towards even 630, 640 on the upside. Now, we were originally even talking about some bigger picture measure moves ending up there, but we simply said that it wouldn't be able to make we didn't expect it to make it there in one fluid motion. But now that we've had this 2-3 week sideways consolidation, it certainly would have unwound the overbought state of the market and leaves room for one more leg of the rally. This would certainly be helped by a global rally if we saw the S&P and all the other European indices all pushing to higher levels, then it would naturally allow the FTSE to make that move higher. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.